following is a presentation of TFNN. Live at TFNN, the Money Masters. Call now, toll free at 1-877-927-6648. Internationally at 727-445-1044. Now, the Money Masters.
Good day, Money Masters and Treasure Hunters. Welcome to the January 29th, wonderful Wednesday edition of the Money Masters Show. I'm your host, Steve Rhodes, and I am grateful for your presence here today. My outcome, as always, is to help you to become a better money master and to provide you with the tools that, just simply tools that empower human potential. Because living up to our potential, folks, truly, isn't that really something that you and we've got to master each and every day? So let's begin our day with empowering beliefs. Change your mind, and guess what? You will change your life. You and I, really, we don't understand the giant capacity that we can immediately command when we focus all of our resources on mastering a single area of our lives. And, of course, one of those areas I believe that we should master is trading and investing. Another area is time. You see, once we master time, and this is important, once we master time, what we typically identify and understand is that we overestimate what we can accomplish in a single year. However, what we really underestimate is what it is that we can achieve in a decade. Now, some of us, we know folks like this, don't really achieve what we truly want. And the main cause is because folks just never direct their focus. They never concentrate their power. It's as if they are dabbling their way through life, never deciding to master any one thing in particular. I know that you know folks like that out there. I say success comes from taking initiative, from being persistent, and from making sure we express the depth of our conviction with every action that we take. After all, the market expresses the depth of its conviction from moment to moment. So the real question is, what simple action could you take to produce a new momentum towards some area of success that you're looking for in your life? This much I know to be true. The path to success, it is to take action, but really it's to take massive determined action. That is truly how you get on the path to success. There's no abiding success, folks, without commitment. If you want to be successful, it's really simple. Go find someone who's achieved the results that you want. Go find that person or persons. Go ahead and watch them. Use that formula that they use out there. Copy what they do, and guess what? You'll achieve the same results. In fact, what you'll do, you'll take their formula and you'll make it better. So the time is now to master anything that you want in life. I'll leave you with this last thing. Life is simply a mirror, and life reflects back to us that which we think. My favorite expression, and you know this about mirrors, is turn your mirrors into windows. And that means look in the mirror, see the person you want to become. I always say become, because each of us, no matter what level we're at, we are always improving. And then take that massive action, jump through that mirror, turn your mirrors into windows. Let's go check out the mirrors of the markets here right now. Dow is off 84 points. It looks like the bounce is underway again out here after a nice brief sell-off this morning. The S&P is off 8 points. It's trading at 1784. The NASDAQ is down 18 points right now, down about 0.5%. You've got the Russell down 5, trading out at 1132. New York Stock Exchange down 57 points out here. Goldilocks up $13. It's trading out at 1264. Silver up 21 cents. It's trading at 1972. Light sweet crude back 74 cents out here. Natural gas up a dime right now. Our call-in number is 877-927-6648. Let's begin here. I say, bounce may be underway here. We're going to, unfortunately for me, I've got to wait another 20 minutes here to make that determination. That determination that I'm taking a look at is really coming from the ES Mini out here. I think it's got a really well-defined descending price channel out here. And what I'm waiting for is to see, is price going to go ahead and break above that? If it does, it sets up at least a short-term trade. Where will that trade take us to? Well, from where we're at right now, what you could expect is at least a move up to about the 1787 level. That's 10 points above where we're at right now. 1793 would not be out of the question. That would be your 0.786 retracement area of just simply this move down, coming from about 330 this morning out of the 1799.75 level out here. That descending price channel we're looking at, that's off of where price really started to make its move to the downside out here. And therefore, it's an important price channel to be looking at, and that really right around the price level January 22nd, right around the 1843-ish type range out here. Right now, we can see that in that last half-hour segment coming into the 10 o'clock time frame, price tried to get above the descending price channel, and it was stopped right there dead in its tracks. To me, that is a really good indication of just how important this price channel is. Right now, you've got price just peaking above that area, but that's all that it's doing right now. It's peaking above that. It's trying to get up to the 0.382, the dead cat bounce of this leg down here. That takes you to 1780. So no real signal here just yet, at least inside the ES Mini. Hey, if it can't bust them up, in this case here, it's trying to bust through that rising price channel. Well, then you've got time for this thing to move to another leg to the downside. Why do I say that? Well, number one, when you get into that extreme overbought or oversold condition, in this case here, it is oversold. If you take a look, if you're watching this on Tiger TV, and I hope you are, either by the live stream that's coming through or maybe just simply through your computer device out there, you can see my chart. I'll describe to you, for those of you listening on the radio or your mobile device out there at TFNN.mobi. As price was moving back this morning here, inside that 14-period RSI, doesn't matter what time frames you use out here, 30-minute chart is a real beauty for utilizing this tool, because when the rubber band stretches to an extreme out there, it has to snap. Now, the question is always going to be, what is that snapback? That's why we use these tools. Now, in this case here, coming into the 9:30 a.m. time frame, we had the relative strength. In this case here, relative weakness indicator. It's called relative weakness on the downside and relative strength on the upside. So the relative weakness indicator getting down to a level of 16. Folks, when it gets below 30, you start to move into a oversold condition. You get to 20 or below, you start getting into extremes, especially when it's averaged out over a period of the last 14 bars out there. That means that a market needs to work itself off. In this case here, that may be all that we are really seeing, is just simply, it's like running a race. Just picture running a quick little sprint. In this case here, it wasn't a marathon, where you're running at, whatever the difference between running a marathon and running, this is not a joke, by the way, although I wish I had one. Maybe somebody can fill in the punchline. The difference between running a marathon and running a 100-yard dash or something like that out there. Well, in the case of the market, the way that it works is when you run that 100-yard dash, you're putting in all of your energy. I mean all of your energy, right? And that's really what it did. Made a mad dash this morning here, made a 100% move. This is the ES Mini we're looking at, from 3:30 this morning down to the low so far that was put in at 10 o'clock, 9:30, 10 o'clock. So when you do that, and you run that hard and use that kind of energy, you got to at least pull off over to the side, right? Got to pull off over to the side. Now, in this case here, that was the energy by the bears. Now what we're just trying to identify is there any energy here for the bulls? And that's why I'm using that descending price channel out here for the market to bounce up to the 1780 level, which it actually hit here during this 30-minute session. It got up to 1779.25. So to a certain extent, close enough for me out here. That's just a normal bounce. So if we see, in fact, the ES Mini get above this descending price channel, that'd be a turn indicator that price wants to actually move higher out there. So that's what's going on inside of the ES Mini. Just really, if you didn't catch the 9:30 show, some of this is a little bit of an update from that. And I just think you be patient, know what the markets are doing. Have your areas of support and resistance, and they may be different areas for you, drawn on your charts. That way you can let the market prove itself to you with regard to what it wants to do. If we take a look at the Dow futures, as the Dow futures are making that same cascading fall out there, as they were making that move down in that extreme oversold condition, the bounce here coming into the 10 o'clock time frame, not even a bullish candle out here. So just really the body, it's called a piercing candle. But a piercing candle is, if you were to take your two candle formations and go 0 through 5 with 0, or 1 through 5, how about 1 through 5, because 0 through 5 would be 6, right? So if we were to take our 5 potential two two candle reversal signals out here. A piercing candle is number 2 out of 5, with 5 being the strongest. So it really needs some additional confirmation. That would be a close, I would have to say, above the level here inside the Dow futures of 15,758. I want to make sure I give you the right number. 15,758. You're at 15,750 right now out here. So we're not seeing the reversal signal other than just working off that overstretched, trying to gasp, trying to catch some its breath out here, and that is inside of the Dow futures. Let's take a look at something that is a bit stronger out here. There was some strength and resilience yesterday inside of the NASDAQ. It really fought off Apple's woes out here, Apple's price woes. Speaking of Apple right now, today they're down another $5, trading at the 501 mark. Now, we did see a nice bullish engulfing candle. We did see a test of a swing point. Let's go check out the volumes, by the way. Now, that swing point was at 6:30. This was on January 27th, so only a couple thousand shares out here. Let's go back to a price where we got a little bit more volume. 15,000 coming in at 5 p.m. on January 27th. So you had 15,000 contracts to the downside out there. And as we were coming down here this morning during live trading hours, about the same volume. So you had about 15,800 contracts really testing the swing point. Now, I'm backing up by 2 swing points just to get a comparable volume out there. Yes, on this 30-minute chart for the NASDAQ, it also was forming a price relative strength divergence out there. I know somebody in the audience saw that out here. That's as it was making that little piercing candle. That was at 6:30 on the evening of January 27th. So the NASDAQ here, has tested a swing point with similar type volume, so it wasn't exactly on dramatically lighter volume here just yet, and it's just working off that oversold condition. So I'm not overly enthused at the moment with regard to what the market is communicating to us about this bounce here. And yesterday could have been the one-day bounce out there. That really my system that I use was forecasting, a bounce. And with the Fed coming out today, I think the statement gets released sometime between 2 and 2:15 or so. We ought to see some fireworks in the marketplace, and I can tell you we're in a we're in a downtrend out here, so that much is very clear. But I can't tell you the way that the market is going to respond to the news out here. In the meantime, let's go check out the indexes here. Let's go see what's going on the daily index. Many of you may not follow the futures. I do suggest you get access to it, especially if you are a technician. Not that you need to trade it, but what you do need to do, you want to get yourself on equal footing, and equal footing is time. In this case here, you want to be able to fill in that time gap between what occurs in the marketplace between the 4 p.m. close and the 9:30 open. Why would you only limit yourself to limited data as to what's going on? You will be missing out on so many patterns and being able to fill yourself in out there. So if you trade the ETFs, if you trade the sectors within inside the ETFs, you want to, and you are a technician, and you make technical decisions out here, go ahead, pay the money, whatever it is you've got to do, find a way, find a source, even if it's getting lagging information by even 10 minutes out there, go fill in that gap and get access to the futures contract so that you can really see what's going on. Right now, we've got the Dow off 130, the S&P is down 13, composite off 30 points. We'll be right back.
Andy Hecht's powerful weekly newsletter, the Technomental Commodity Report, is going up in price again at the end of this month. Andy's weekly newsletter has delivered multiple profitable trades for his subscribers, even including a triple-digit winner within recent months. Right now is a perfect time to get a full month-long trial to Andy's newsletter with no obligation to pay anything. Andy will also be hosting a subscriber event on Thursday, January 30th, Seasonality in Energy and Agricultural Commodities, that you can gain access to by simply signing up for a free trial to Andy Hecht's newsletter, the Technomental Commodity Report. A 30-day free trial to the Technomental Commodity Report, a free 60-minute live online webinar with Andy Hecht, which will be archived, and you lock in the low price of $49 a month should you decide to continue after your 30-day free trial. Offers don't get much better than this. Act now before January is over and this offer passes you by. Sign up for your 30-day free trial to the Technomental Commodity Report today.
Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen live during those shows, and have access to all those charts. You can test drive the Tiger's Den absolutely free for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com.
You take a hands-on approach to managing your investment strategy. You're always looking for the next trading opportunity to magnify your perspective. Direction Shares connects sophisticated traders with a powerful array of ETFs from a wide range of asset classes. The markets may go up and down, and you want tools for both sides of the trade. Discover how we can help at DirectionShares.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction Shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction Shares. To obtain a prospectus or summary prospectus, please contact Direction Shares at 800-851-0511. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors employing dynamic strategies. Investors in the fund should understand the consequences of seeking daily investment results, understand the risk of shorting, and intend to actively monitor and manage their investments. Distributor Foresight Fund Services, LLC. Wouldn't it be great if you could get a red light, green light indicator that gives you signals on 25 different futures contracts? Now you can with Taz Signal Box. This red light, green light market profile system dynamically updates 24 hours a day and provides you with important trend and trade signals on 9 different commodities, 9 different indices, and 8 different currencies. Right now, you can receive a 2-week free trial to Taz Signal Box. For all the details and to find out how the Signal Box works, visit the front page of TFNN.com. TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
Steve takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Welcome back, folks. Dow is down 140, trading out at 15,789 right now. Had a request to go take a look at Celgene, ticker symbol CELG on my screen here right now. We've got the Rhodes Momentum Indicator signals, the top portion of the screen. Top half of the screen is the weekly chart. The bottom half of the screen is the daily chart. So as we begin taking a look at the weekly chart, and I'm going to switch over, we'll take a look at a monthly chart as well. Weekly chart here for Celgene, which has been in a really nice move to the upside. I mean, really strong momentum. As I pull this back here, you'll see that the last time, let me get my, make sure I get my crosshair out here, makes it a little bit easier. Last time that the Celgene fell into any kind of a sell signal was back in May of 2012. May of 2012. We're at the end of January 2014. This thing moved into a nice buy zone. That buy zone on a weekly chart was triggered the week of July 27, 2012. It has never looked back since until this week out here. So now you can see on a weekly chart, and this is something to be paying attention to inside of Celgene. This has slipped into, on a weekly time frame, this has slipped into a sell zone out here. Now the week's not over. It indicates a hammer candle for it to close right here, but nonetheless, this is in a weekly chart. The trend is telling you that it has changed inside of Celgene. Now, if I spread this out, oops, sorry about that. I got to catch it in just the right spot out here. Apparently I did not do that. There we go. So I widen this out a bit here more. When you see these little green boxes, in this case here on the daily chart, well, number one, it's trading below the 50 on the daily chart, below the 50-day exponential moving average. So that is, you can use that as a lagging indicator, but still, nonetheless, you're trading below it. That's not a bullish outcome at all. It's got selling pressure both on the weekly, certainly on the daily as well. Now let's go give a idea as to where this might pull back to. Now the monthly chart also looks a little bit like the S&P 500, the New York Stock Exchange, not the composite here just yet, but we now are starting to see, and we have, this doesn't obviously end till Friday out here, but we're now starting to see on monthly charts bearish reversal candles. In the case of Celgene on a monthly chart, you got to go all the way back to April of 2012. So I think it was May in 2012 on the weekly when we were taking a look at the when it got into a sell signal in April, the end of April 2012. You got a little bearish engulfing candle. You got some follow through for the next couple of months out here. So that's what we're seeing inside of. And in fact, if Celgene closes below last month's open, December 31st open, which was 161.87, you're at 160.03, that'll give you a bearish reversal signal on a monthly chart. Now I'm going to switch back over to the daily chart here for us. And if we take a look at the daily chart, you can see a hammer candle out here. I can see a hammer candle. A nice type 1 hammer candle. Type 1's being the strongest out here. And that hammer candle low is what it's up against right now. And that's, let's put a line across the screen out here. That's the trading session from December 18th. So December 18th, and we saw just a breach of that area on January 27th out here. So for one day. Now, the volume was 5.4 million shares going against a hammer with 3.5. So it was coming into a swing point. It busted the hammer. This says to me that, you busted that hammer, even though you're trading back above it. There's a little bit of a gap out here. It's a very tiny gap, almost very hard to see. The low of January 24th is 161.11. The high of the next session is 161 even. So at this stage here, that really becomes your resistance area. And that has been tested, or is being tested at least today. Let's make that a red line. So it looks like today you've had a high of 161.19. So that is a test of that area. This says to me, you broke that hammer, that Celgene wants to move lower. The ideal potential trade, now this has not had substantial volume or anything. This actually has a high volume high that has not been tested, which is nice. That's a January 13th level. But that doesn't mean that it can't pull back further. An area that has been tested and is held, and this would be a nice little buy area as long as it pulls back on light volume. Here's where you can use a gap to your advantage. In this case here, it doesn't have to fill the gap. It may fill the gap, so you want to be watching the gap area. And the gap area that I'm referring to is the January 10th high, 125.28, to the low of where it gapped up, that sign of strength, which is at 131.67, 6 million shares out there. 131.67 was 6 million shares. That was tested with 5.5 million on July 18th. It was tested again with 2.4 million on August 16th. That's the price area where if Celgene can pull back to it, can do with light volume. That would become your buy area inside of Celgene, CELG. Right now, the Dow's off 140. S&P is down 14 points. We got Goldilocks up 15, silver up 24 cents. We'll be right back.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock and option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.
No matter where you listen to TFNN programming, we want you to know you can always access your favorite shows on demand through TFNN.com. TFNN airs live programming every market day from 9 a.m. till 6 p.m. Eastern, and you can view each program by accessing Tiger TV through our homepage. We even have an easy link for all mobile devices, including iPhones and iPads, located at the top right-hand corner of the TFNN homepage. You can't use your smartphone to view Tiger TV, but if you don't have a mobile connection that can keep up with streaming live video, then you can simply visit TFNN.mobi in the browser of your smartphone for live streaming audio of all of our programs. The mission of TFNN is to educate our audience directly and interactively through our interactive website and radio call and talk shows. TFNN is able to teach all levels of investors the technical skills needed to trade in today's marketplace. In order to get the best information possible, TFNN has assembled the most respected financial minds in the country to provide the most current news and comprehensive advice available. TFNN.com. Educating investors.
Has the current market volatility continued to stop you out of trades when the market spikes against you? Now is the perfect time to open up an account with Nadex. Nadex, the North American Derivatives Exchange, is a brand new, completely regulated Chicago-based exchange, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their completely free trading platform, which also features real-time charts and full customization capability. One of the advantages of trading with Nadex in volatile markets is that your risk is always capped and you have the ability of keeping your trades open even when the market spikes against you. Nadex is completely brand new with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's Nadex.com. Or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors. Daryl Martin coined the phrase diagnostic trading, and we're happy to announce that his diagnostic box spread analyzer has finally been released. The Diagnostic Box Spread Analyzer helps you easily identify the best box spreads on Nadex in seconds, plus you receive access to the diagnostic deviation levels, as well as step-by-step training videos teaching you how to trade Nadex spreads so you can quickly master the mechanics of this simple yet powerful trading instrument. By pulling live data from the Nadex exchange, the Diagnostic Box Spread Analyzer does all the math for you, calculating risk, reward potential, distance to break even for both outright spreads and spreads used to hedge the underlying market. Visit the front page of TFNN.com today to get your 2-week free trial to Daryl Martin's Diagnostic Box Spread Analyzer and gain access to the valuable information it can provide when trading the Nadex box spreads.
This segment is brought to you by TFNN. Test drive all the newsletters for free at TFNN.com.
Welcome back, folks. Dow's off 122 right now. Let's go check in on some of the commodities out here. Let's take a look at natural gas right now, up about 2.25%, up 11 pennies. Now, if you're watching us on Tiger TV, I've got my screen split into, over on the left side happens to be the February contract, the daily contract out here, and you can, and that's and over on the right-hand side, I've got a 30-minute chart for the March contract, so you'll see a little bit of a price difference here. Let's not worry so much about that, the two different contracts. What you can see on the left-hand side of the screen, the daily chart, very strong A to B equals CD up. It made the 1 to 1.272. A to B equals CD up. Now, price here traveling with inside this bar. This bar right here is very important, January 24th. Let's take a look at this. This is the bar. I'll put a black line across my screen. Well, boy, that didn't work, did it? Let me... too funny. There goes the A to B equals CD as well. No problem. Let's put a black line. Let me try that one more time. A little magic here. And we're going to put a black line across the screen. This is the candle that's important for us to watch. The body is truly the essence of price. That's what we're paying attention to out here. Until price breaks either side, it's not really providing us with a ton of information. But if we do take a look at the 30-minute chart out here, so if you take a look at price, in essence, what has price done thus far today? What it has done off of this high. That's why I'm going into a shorter-term chart out here. Now I'll make it the full screen just so you can take a look at this here. What price has done is made the 0.786 Gertley sell pattern. It did that here at about 6:30 this morning, made a 0.786 retracement. You did get a little reversal signal here in the time frame. It's a 3-candle reversal signal, well, really a 2-candle. We're going to call it the doji candle that took place right here at 7:30. That says that resistance is really the high of that doji candle out there. That is at $5.07. Again, this is the March contract that we are looking at right now. You saw the leaves falling off of the tree. That's with the close lower out here. To a certain extent, it also acts as a bearish engulfing candle. Of course, how much energy does it really take to engulf a doji candle where your open and close are virtually the same out there? It doesn't take much energy at all. But we did see a move down. Now, what we could actually be seeing here is a couple of different patterns that you want to be paying attention to. Could just be a small A to B equals CD down pattern that is in the process of forming. Don't know. That A to B equals CD pattern might take in about the 480-ish type range out there, setting up its next Gertley buy. But what you really want to be paying attention to is whether you're long or you're short this type of a trade out here. And I would not suggest you being short. But what you do want to be paying attention to, especially from the long side, you want to see this area here now fail. You want to see price get above the $5.08 level. Because not only will this likely turn into a 100% move of a move and get all the way back to the swing point, that would be your minimum expectation if this pattern here fails, and that would be at the 519-ish range out here inside of the March contract. What would likely occur is this will turn into a butterfly, and this would be some type of expansion, a 1.272 to a 1.618 expansion of our swing points out here. That would say you could actually be looking at about the $5.34 range. That would be the bullish case for this 0.786 Gertley pattern. Now, a normal move with regard to retracements here on the way down to then set up the next potential buying opportunity would be a move down to about 481. So, just depends on, and I don't know which way the market is going to go here. It doesn't really, you don't really need to. All you want to do is want to be paying attention to this. If you were looking for a continuation move is taking out the 508 area, and then you're looking at price moving up to about the 520, and then if it can take that out and it can come into that swing point with some volume, that's where you would get the information that it will want to go ahead and do that butterfly pattern out there. Now, the volume here you can't necessarily really use, in my opinion, because you're dealing with 12:30 in the evening out here for natural gas from January 27th out there. But that is how the patterns are setting up inside of the natural gas contract. If we take a look at silver, we touched on this briefly during the first hour of the show. We were taking a look at the daily patterns out here inside silver. The daily pattern is really well-defined consolidation pattern, sideways consolidation, the highs of which are about $20.50. The low is right around the $19.90 area. So, a 230, 240, 250-ish type range. And that's a beauty because when silver does break the consolidation pattern, you would expect your move to be equal to or greater than that. Now, in the case of silver on a 30-minute chart, and this is one of the things that we pointed out in the opening hour, we saw silver make a nice move at 9 o'clock this morning. Nice wide-ranging bar to the upside out here. Volume behind the move, 5,500 contract versus the wide-ranging bar on the way down, which had 7,200 contracts, and that was at 12 noon on January 24th. So running into some potential resistance out there. But that's not so much the case. What was really the case was it was in that extreme, exuberant, over on a 30-minute chart, overbought condition out here. And that's really what it was doing. It's now working its way off. But in the case of silver, if you take a look at it, you can see it very well, even though it's in a consolidation move out here, when you actually put it on an actual intraday chart, a 30-minute chart out here, you can see it's in a nice defined descending price channel out here. So in order for silver to start saying, hey, it may want to go ahead and take out this consolidation high out here, it's got to break through the $20.06 area. Look for silver right now. If we take a look at the retracements that it's doing, it's neither overbought nor oversold. That means it's got room to run all the way back down to the next primary trading range, or its primary trading range boundary line that has acted as support here for the last, since about 10 o'clock in the morning yesterday, and that is right around the $19.50 type area. Let's go to Annie in Denver. Annie, thanks for calling. Thanks for holding. How are you this morning?
Okay, how are you, Steve?
I am excellent. Thanks so much for asking. You wanted to take a look at ticker symbol EXK, Endeavor Silver Corp, I believe. Tell me what you're doing, how I can help you.
Okay, so I've got SLW, and I'm thinking it's looking kind of sluggish, and I was thinking of switching out to EXK.
Okay.
And wondered if that makes any sense, or if, I've done some comparisons, but mine are very primitive. I can't do all that fancy stuff.
Oh no, that's okay. Hey, you're doing something, so don't. That's a great thing. So
yeah.
Congratulations on what it is, whatever tools you do use. So that's a good
right.
thing.
Well, I do it really simply. I go to Yahoo Finance because Ameritrade doesn't do it as easily, and
yes.
I'll do the 5-day, 1 month, 3 months, 6 months, 1 year, and compare it to the EXK to SLW in that process, and see. EXK just seems to have been coming up recently.
No. Oh, great. So we'll take a look at both. I'll put the SLV on the screen as well, so that we can take a look at it. So in the case of SLV or silver, we know that it's in a relatively tight consolidation range. In the case of the SLV, from about 1850 to maybe the 1950-ish type of range out there. So about $1 move out here. And is your trade time frame intermediate term, long term, daily? What's your outlook?
Well, with gold and silver, I never know for sure. I'd like it to be a little longer term.
Okay.
I've held the SLW for
SLW.
a while now.
Okay. SLW. Okay, I'm sorry. I thought you did say SLW, and I heard
right.
SLV. So silver wheaton. Okay, so you're comparing those two stocks. Okay, that makes it a little bit easier. So my apology for that. Now, in the case of both silver wheaton and Endeavor, both of these will likely really break out. When silver breaks out as well. So okay, so in both of these equities, you would like to hold these for a longer period of time,
Well, it's hard for me to do the day trading or even the swing trading sometimes. It's just hard because of my health conditions. So.
Yeah, no problem. So in the case of silver wheaton out here, you made a high, made a key reversal session. That's where your resistance is from January 24th, just a couple of days ago. With 5 million shares yesterday or 2 days ago, 3 days ago, you pulled back with 4.3 million shares. It really doesn't look that bad. Silver wheaton does not look that bad at all out here. It looks like it made a 0.786 Gertley pattern. Let me just start from scratch out here. Let's just start from a clean chart and see what it actually did at its lows out here for you. So a little bit more than a 0.786 retracement. That was on the daily chart. If you're looking for a longer-term chart as well, let me just see what it was doing here on the weekly. So on the weekly, what I like about the weekly chart for this specific equity is if you come back into the swing point all the way back in 2008, March 14, 2008, that area is held as a nice support level right around $19.38 out here. I'm just looking on the longer-term charts where this thing could actually run to. So I would have to say that silver wheaton could run to about the 34, 35 area, and you're at $22. So on the longer term basis out there, just to kind of keep that in perspective. So you write those numbers down, then you can do the value judgment.
Right.
Okay. In the case of Endeavor silver out here, and I'm going to put, I think that was on a weekly chart, was it? Yeah, weekly chart. I also want to put this on a weekly chart for you, just to kind of get an idea for time frame where this thing could. I just want to see if there's any high volume high out here. So I'd use about the same general area. I would say that Endeavor could maybe run to about the 833 level. You're at 440. It almost sounds like that's a double compared to silver wheaton. So just from that perspective, you might want to take a look at it. I'd like what Endeavor has done here by breaking the descending price channel, and it did that back on January 3rd out there. So it's broken through that price channel. It's just finding resistance, just as, silver's kind of taken a pause here. I mean, I think they both look good. Is there a reason maybe you wouldn't just split your trade into both?
Oh, I could. Yes, I've got enough of SLW to split it.
Okay. I don't really see anything bad, any harm done here, with either of these. And
Well, one of the things I've noticed as I'm doing some reading, just superficial reading, was the scare about Mexico and the companies that are mining there facing some taxes. But then after that scare is talked about, then later they start talking about, well, it's not going to hurt this company or that company. They've got it factored in. It's not going to be a problem.
Sure. So, so it's good that you're doing some additional research on these companies and take a look at some of the fundamental aspects of that. I'm just doing really a technical,
right. So I wanted to see what the techs have to say.
Yeah, I think they both look equally at this stage here. I don't see anything really wrong with either of them. And I would have to say, your question to me is, should you switch from one to the other? I would say if you're looking at that and you just want to have this one in your portfolio, I would just go ahead and split your trade between both.
Yeah. Okay.
I mean, that's my best outlook at this stage, but they both look like pretty decent stocks at the moment.
Super. Well, thank you so much, Steve.
Okay,
really
you bet. Thanks so much for calling. And that was taking a look at Silver Wheaton SLW and Endeavor Silver with Annie in Denver. Right now, let's go back to the markets. The Dow's off 112. Let's go back, take a look at those 30-minute futures contracts here because we've drawn areas to help us to identify where, whether price is running into resistance, whether that we might see a little bit of a breakout here before the 2 o'clock session. Right now, if I take a look at that ES Mini, you can see that area here. It's the third time. I don't know if the third time is the charm. We'll find out. But that is where you've got the ES Mini trying to break the descending price channel. That's the red diagonal, top of the red diagonal line going across my screen out here. That has been attempted during the last hour, the 10 o'clock session as well as the 10:30 session, and we have seen a failure here both times. Let's take a look at some of these stocks that are popping and dropping out here. You've got to the downside, you've got Priceline, Google. Let's take a look at something else like Commvault Systems, CVLT. Let's go see what it is doing. It's down for sure, down by about 11%, down with some volume. You can see the bulls are trying to rush in to save this. It is gap down this morning, so we got a gap down with volume. Commvault Systems coming all the way back to its swing point here from May 22nd, 2013. That had 1.2 million shares down there, but today you've already traded down with about 2.5 million shares in just, an hour and almost an hour and 25 minutes or so of trading. So that's a dangerous thing. It is finding some support out here, but this could actually be forming a really large A to B equals CD down. So if you were in this equity, you want to see this thing close above 66.95 today. You're trading at 67.92, so it has that opportunity. But if it closes below that level, what that will actually do here is set up an A to B equals CD down that will say that this equity ought to trade down to about $48.12. 54.42 is your 1-to-1 A to B equals CD, but I think the $48 range is more likely the case of where this will Commvault Systems, where this would trade down to. Let's take a look here at, let's go look at Pioneer Natural Resources. I think I've got this already labeled in one of my charts here. PXD was looking to take a look at, right here. So I had this, and those of you that have been listening for a while, you would know this pattern here has been drawn for quite some time, and that is the 156 area is where I have it targeted for a potential buy. It's got really nice Fibonacci numbers coming together at that 156-ish type level. Right now it's trading at 167.80. Volume here this morning on the down move, 694,000 shares going into 2 million shares. We'll be right back.
Patterns, profits, and peace of mind.
Are you looking for a precision edge in the market? Something that can stack the odds in your favor? Then look into Larry Pesavento's trading newsletter.
Patterns, profits, and peace of mind.
In each weekly issue, Larry explains what's going to happen in the markets based on the pattern he sees developing and gives you actionable trade ideas based on those patterns. Plus, you'll get his detailed analysis on a variety of markets and sectors, including stocks, treasury bonds, the gold market, oil, the dollar, the Forex market, and more. You'll get access to all the patterns Larry is seeing in the markets, plus the Astro Harmonics and powerful Bradley stock market model that Larry utilizes for less than $5 a day. An extremely potent combination that will give you the edge you've been looking for. Try patterns, profits, and peace of mind absolutely free for 2 full weeks. That's an $85 value. Yours free when you register right now.
Get Larry's patterns, profits, and peace of mind.
And get the edge you've been looking for.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to The Gold Report, an $85 value, visit the front page of TFNN.com today.
David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today.
We're told to follow our passion and everything else will fall into place. I hope that's what each of you are doing each and every day. Hi, I'm Steve Rhodes, host of the Money Master Show at TFNN.com, and my passion for technical analysis is what led me to the most fundamental discovery in pattern recognition, the Rhodes Momentum Indicator, market scanner, and trading strategy, a set of tools that identify the momentum and power of the trend, the likes of which have never been seen before, for every market and every time frame. Yes, folks, the trend is your friend, unless you're on the other side. New to technical analysis? This is the place to start. And experienced traders take advantage of the trend like never before. Experience the power of the Rhodes Momentum Indicator each day, available to subscribers of my newsletter service, Mastering Probability. I guarantee your satisfaction for the next 30 days unconditionally, so there's no risk to you other than being on the wrong side of the trend. Mastering Probability, available on the homepage of TFNN.com. And folks, live with passion.
Catch Basil Chapman as he uses his Chapman Wave methodology to call the markets. The Tiger Technicians Hour, next on TFNN.
The Dow is off 101. S&P is down 9. Let's go to Rick in Orlando. Rick, thanks for calling. Thanks for holding. How are you this morning? Rick, do we have Rick?
Yes, we have Rick. Yep.
Hey, Rick, how you doing this morning?
I'm doing fine, Steve. Thank you for taking my call.
My pleasure. Good to hear your voice. Hope all is well. Happy New Year to you.
Yeah, to you too. Very good. I didn't think that's been so far back.
Yeah. Yeah. Only 29 days have elapsed out there, but it seems like a lifetime.
It's almost a quarter of a year.
There you go.
See, almost a quarter of a year. Yeah, I'm looking at MUX. For my time period is very short term. I want to trade the. I'm looking at the ABC up that completed in MUX in the very last month and a half, and I want to trade the C to D.
Okay.
On the way up as the market goes down.
So now, what time frame chart are you looking at?
I'm looking at a 3-month chart.
on a monthly basis, or I'm looking at
daily chart.
Daily chart.
3 month long, and with an 8. I'm taking an 8 point about 6th, 7th, 8th, or 9th of January for my 8 point.
Okay.
And let's see, 21, 22, 23, 24 is my B point.
Okay.
And I'm hoping we'll retrace a little bit further here, to get us a .382, and then I want to get in.
Right. Okay, I got you. Okay, so if I take a look at McEwen Mining is the equity we're looking at, folks. MUX is the ticker symbol. McEwen Mining has a swing point out here that it tested recently. That's the September 19th area, and that had volume of 6.6 million shares. Now, as it came in there, it came in light, about half of the volume, 3.5 million shares out there. And that's one of the reasons that you're seeing some of the resistance out here. As far as A to B equals CD patterns, I'd say you first really have to start with the swing point low on December 19th as your A point, and I would say, you could pick up the January 14th level as your B and your C that very next session down. So that would be getting you just your 1-to-1 would be 282. But if that's really the A to B equals CD pattern that's out there, you ought to get at least $3. So that says that you should at least test the swing point high of 292 from September 19th. Let me put this on a little bit of a longer term basis. This, all of these have done very similar things with regard to breaking downtrends and so forth. But is your question, where's your entry point? Is that what you're trying to identify?
Well, I want to identify if I'm looking at this right, and you seem to be suggesting as much that pretty soon here it'll be a good point to enter. That's the main question. The real key is going to be gold. So. Really, gold and silver. These stocks, if you put the mining stocks and you were to overlay a gold chart on it, what you will see that these things really move in conjunction with gold. So the next breakout occurs when if gold breaks the descending price channel and the trend line that it's in. It's already broken the price channel, but what it's dealing with here today. Rick, is the trend line, and that's what it's trying to close above here today. But here's the thing: gold's got a confirmed A to B equals CD up. So right now it's just kind of chopping sideways here for a bit, and I think it is time to take a look at entry points where you want to enter on any of these mining equities such as McEwen Mining. But I think you're in the right place. You are playing in the right sandbox for sure. Oh, thank you. Thanks for that support there, Steve.
All righty.
That gives me confidence,
well, good. I'm glad to hear that. Hey, folks, thanks so much, Rick. Have a great day. Stay tuned. Our man, Basil Chapman, he's up next. He'll set you all straight. Thanks for joining me, folks. Have a great Wednesday. Look forward to seeing you first thing tomorrow morning. Take care now.
Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns, as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com.